Wall Street today, the Dow Jones Industrial Average was off almost 6 points. The Dow finished the day at 1247.86. Trading was moderately active as some 87 million shares changed hands. Losers outpaced gainers. 580 stocks advanced and 1,250 declined.
How many times have you heard those words on radio or on TV newscasts? Well, you might not have known it, but everything that man said is a stock market technical indicator. We are now ready for the technical side of stock market analysis. In the last segment, you remember, we talked about fundamental analysis. Those are trends outside the stock market. Now we're going to take a look inside the market. Let's take another listen. Luckily, I'm tuned to one of these all-stock radio stations.
On Wall Street today, the Dow Jones Industrial Average was off almost 6 points.
The Dow Jones Industrial Average. That's just a stock average. Stock averages are the best known and the most closely watched of the market's technical factors. You can find them on the financial page of any newspaper. The Dow Jones Industrial is certainly the most famous. It is made up of 30 of the nation's most important companies. The Dow Jones Company adds up the prices of all those stocks, averages them out, and today it came out to, as the man said, 1,247.86. The kid has an incredible memory. Dow Jones also compiles a separate transportation average of 20 transportation companies, a utility average of 15 power companies, and one called the 65 stocks, which is all three indexes combined. The big stock exchanges each compile averages of their own. There's the New York Stock Exchange Composite and the American Stock Exchange Composite Index. These average almost all the stocks on the exchange, and they give you a pretty good sense of how the market is moving. There's also one for over-the-counter stocks. It is called the NASDAQ Composite. Check out these averages every day because you will get an idea of how the whole stock market's been doing.
Trading was moderately active as some 87 million shares changed hands.
Okay, 87 million shares changed hands. That's our second technical indicator, volume. Volume is the total number of all shares of stock traded in one day on each exchange. It's one of the most revealing indicators of the condition of the market. But first, you've got to know how to use the numbers. So let us say that this balloon represents the volume of trading on a Monday on Wall Street. Now, for the sake of argument, we will say that this is 70 million shares traded, which is a moderate day, which is very nice. But what does it tell you? By itself, this single statistic tells you, frankly, almost nothing. But let's compare it with the next day, Tuesday, on which 85 million shares were traded. And then the following day, Wednesday, a big day, 105 million shares traded. Now, look at all 3 days of volume, and now you begin to get someplace. We are looking at building momentum of some kind, the beginning of a trend of some kind, because every day this week, some shares have been traded, then more, and then even more. But what kind of trend is this? Well, volume alone just doesn't tell you. You've got to go back and see what happened to stock prices on these days. If you look at this rise in volume, and you know that on this day prices also went up here, and then more on Tuesday, and even more on Wednesday, now you know you've got a major upswing. People are pouring money into the market, and you would be very safe in predicting that on Thursday and Friday, later on, prices should continue up. But suppose if on each of these days, instead of going up, you discover that prices are going down. That means you got some selling on Monday, more selling on Tuesday, and a lot more selling on Wednesday. Now, this tells you something quite different. People are getting out of the market, and they're getting out in a hurry. Things are getting worse every day. This indicates that later on in the week, you could get more decline, maybe even a bear market. Either way, when you combine volume and price, you can use them together as a guide to where the market is headed. Let's do one more round of this just so you get the hang of it. This is going to be, this time, a low volume week. On Monday, 73 million shares traded, 80 million shares on Tuesday, a little bit better, but not really much of a difference. And on Wednesday, 74 million shares traded. I'm going to add one other fact to this week of volume. Then I'm going to ask you a question. I tell you that prices rose just a little bit each of these days. Now, what does this tell you about the direction of the market? The right answer is to ask yet another question. You should be asking, well, what's been happening in the previous months? If prices have been rising steadily, then this could just be a pause after a big, nice, fat buying spree. Or it could be the beginning of the end, the beginning of the decline. Or let's say prices have been falling up until this plateau. Then this could be good news, the end of a bad time. Remember, you don't want to look at volume by itself. It doesn't mean much unless you look at stock prices and at recent trends in the market. That is how to use volume to interpret the market. There is one other aspect of volume that you should keep your eye on, the volume of block trading. Now, banks and pension funds and insurance companies, even rich people, trade in big blocks of stock that's 10,000 shares or more. These are institutional investors, and the number of block trades gives you some idea of what the Wall Street pros are thinking. And you can find the number of block trades every day in the financial pages of the newspaper.
Decliners outpaced advancers by about 2 to 1. 1,250 down, 580 up, and 150 unchanged.
Technical factor number 3 now. Advances and declines, or as they are called, breadth. Now, using this highly powerful computer, I'm going to show you that if you add up all the advances on a given day on Wall Street, say today that IBM stock went up, and AT&T stock went up, and Exxon went up. Then, let's look at the declines. Bad day today for Texas Instruments, Digital Equipment, and Sears Roebuck. Now there is one last group of stocks whose prices did not change today, like Stretch. Now, if you look at all 3 stock groups, together you can see how many different companies were traded on the stock market today. Not how many different shares, but how many different company stocks. Some stocks, every day on Wall Street, are not traded at all. Nobody buys them, nobody sells them for the entire day. Now, going back to the computer, when advances outscore declines on a regular basis, you can, by looking at this graph, see if this day occurs over and over and over again, that the market is going to be on the rise. On the other hand, if there are more declines than advances, and this is a consistent pattern over a period of days or weeks, then it doesn't take a genius to know that the market is in retreat. What the Dow average tells you about a certain small group of stocks, breadth tells you about the market as a whole.
Now for something you'll never hear on the radio.
This is probably beyond the needs of the average radio listener, but you are going to want to know about technical factor number 4, the action of major stock groups. Now, we're talking here about automobiles and steel companies, technology issues, important groups of stocks. When they begin to move in any direction, that can be a signal of how the market is going to go generally. So say an important group like home building and housing stocks begins to diverge from the general market. Say they start going down. This could be a sign that soon related stocks are going to follow and go down too, like furniture companies and appliance companies, eventually even retail stores, because all these other companies rely for their business on the strength of the housing industry. If you don't build houses, you don't need new refrigerators. So if you are thinking like a technician and some important stock group starts to drop, even while the rest of the market is doing pretty well, this could be an early warning signal. Beware.